Well, hello, welcome to Passive Wealth for High Tech Minds podcast. There are lots and lots of IT professionals who work in the industry. These IT jobs are so exhausting mentally, there isn't much time left for such folks to make clever decisions about their investments. Most are unable to put their money in the right asset classes. This is Prashant Kumar from iRealty Gains. I have worked in corporate America in IT and in business organizations for 25 years. My goal is to educate IT professionals like you about the benefits of passive investing. I will be passing my knowledge and will bring guests who have done very well in their careers and can explain the process and advantages of passive investing. So, let's begin. Hello, this is Prashant Kumar from iRealty Gains. Today we are going to talk about, are we in real estate bear market and when will it be over? Please share your thoughts. So let's get started. So are we in bear market? We know that Nasdaq is already in bear market. It is down 31% from its peak as of November 19th. Dow Jones Industrial Average is more than 16% below its most recent peak. From US to China, developed economies to emerging economies, most stock markets are down over 15% so far in 2022, with many over 20% bear market threshold. So how do we define real estate bear market? A real estate bear market occurs when average decline in real estate price drop more than 20% from the top of the market in terms of the average price. A cap rate decompression may happen, 20% cap rate decompression may happen. We end up seeing a lot of vacant properties on the market. They tend to stay longer on the market, decrease in prices by 10 to 20%. Inventory goes up, slow down in the demand. Supply tend to exceed demand and prices tend to fall a little bit. Rents are likely to decline or be stuck at the current level while cost continues to rise. So the question again comes whether we are in commercial real estate bear market or not. We know that interest rates hikes so far have impacted commercial real estate values considerably. We have seen overboard either the prices have become stagnant or in some cases have gone down. We are seeing more inventory in the markets. Operators are contemplating and holding their decisions. Till about a month ago, it did not seem like as if we were in bear market, although you may tend to disagree with me. But in the beginning of June, we were still doing okay in terms of acquisitions. And, there were a lot of transactions happening. But in June and mid-July, in the last 30 to 45 days, what we have seen due to June's interest rate hike of that 50 bips, a lot of people had a panic. We have seen operators going back, buyers going back to the operators and asking for negotiation, price reduction. And we have seen as much as 5 to 10% price reduction in commercial real estate products. So that happened due to June increase. And we anticipate that there would be a July 20th hike for 50 to 75 bips that may have a greater impact on value. So whether we were in bear market in the beginning of June or not, with this rate increase of 50 to 70 bips in July, there is a possibility that we may end up seeing a decline in the value for more than 10 to 15%. If the 10-year treasury goes up 50 basis point, we will see a broader spread between ask and the offer prices. Those who are already in those contracts, they may either end up coming out of those contracts or they may end up going back to the sellers asking for discounts, because we know that numbers are not going to make sense. If our interest rates are going upwards of 7 or 7.5, then those cap rates, those numbers, those underwriting will not going to work. We know that a lot of investors are sitting, on the side. Basically, they are not buying commercial real estate in the anticipation of a decline in market. And truthfully, even we are one of those operators who are not making offers at this point. Right at this moment, we were in few deals and we had to come out because we are not sure how much would be the increase in 10-year treasury interest rates. If the interest rate continue to rise even after July, and which it sounds like it will be, none of these deals will tend to work. So my question is for the group is, do you think are we in real estate bear market? Number two, are you holding back from selling commercial real estate because prices are declining? And similarly, are you holding back for buying in anticipation that prices will go down? So these are the few questions I want to ask everybody. What are your thoughts? My thought is that we were or we will be in bear market, in the next coming months at least. And the most important factor that are driving the values in 2022, obviously, is the interest rate hike, right? And then inflation, and what's going on in Ukraine right now, and all these sanctions on Russia. Coronavirus has not helped us, and the stock market volatility. So there are a bunch of things that are happening, and most important are interest rate hikes and inflation. They are impacting the values of real estate considerably. From a single family home buyers, is it a good time to buy properties when we are in bear market? Single family homes, yes, why not? We should buy income properties cheap, hopefully buy a deal on a flip, or start investing into REITs. But when the market has gone down, so without saying that it's better, cash is the king. When everybody is greedy, you take a step back, or when everybody is scared, you become greedy. So in the bear market, everybody gets scared, and that's the time for investors and operators to get in and buy some deals. So these are my thoughts. In addition to that, I would like to discuss how long typically these bear market last. They typically last for about anywhere from 9 months to 13 months. Most of them on an average about a year or a little longer. So it's not a bad thing. Even if whether we are in bear market today or not, and if it starts even in third quarter of this year, it's likely to end by second quarter of next year. So anywhere from first quarter to second quarter or third quarter, this will all should be over. Anywhere from first quarter end till the third quarter end. This is my thought. And of course, I'm not an analyst in any way, but I'm sharing my wisdom. Hopefully that will make some sense to somebody. It's not bad. These recessions come to and strengthen our market position. There would be a shift in wealth from, there would be paradigm shift of some sort. But as long as we position ourselves for the upcoming growth, we should be fine. It is scary to those who are stuck in deals, but eventually it will all be okay. So next 12 to 13 months, 15 months are going to be a little bit tough, but hang on, guys. It will all be over soon. Please do share your thoughts and comments on whether we are in bear market. What do you think would be the impact of interest rates on valuation, and are you holding back on buying and selling at this point? And when do you plan to start your activities? It will help me. It will help others in the community. All right. Thank you so much. And once again, this is Prashant Kumar from My Realty Gains. You can reach me at www.myrealtygains.com. Thank you so much. Thank you so much for listening to our podcast. As usual, you can reach me via my website, www.myrealtygains.com, and via email, prashant@myrealtygains.com. I would love to hear from you and talk to you about specific needs you may have. Please schedule an appointment with me via my website, again, www.myrealtygains.com. Stay tuned for next podcast. This is Prashant Kumar signing off for today.